Welcome to the Riskwiser Zone, the podcast where we cut through the noise and bring you the most insightful analysis of the global economy. I'm your host, Lewis, and I'm delighted to have you join us today. As we begin this episode, the world is abuzz with news from the BRICS summit in Rio de Janeiro, where leaders from Brazil, Russia, India, China, and South Africa, along with their new members, Egypt, Ethiopia, Indonesia, Iran, Saudi Arabia, and the United Arab Emirates, are convening to discuss some of the most pressing issues facing our global community. Now let's dive right into it. The BRICS nations have made headlines by voicing serious concerns over the tariffs imposed by U.S. President Donald Trump, calling them indiscriminate and a risk to the global economy. This unified stance from these emerging economies, which represent about half of the world's population and 40% of global economic output, is significant. They're not just whispering their discontent, they're making it loud and clear that such trade policies are not only harmful but also illegal. But what does this mean for you, our listeners? Well, in a world where trade wars can have far-reaching consequences, from inflation to job losses, understanding the implications of these tariffs is crucial. The BRICS nations are signaling their intent to stand together against what they perceive as unfair trade practices, and this could lead to a shift in global economic power dynamics. Furthermore, the finance ministers from the BRICS group have proposed reforms for the International Monetary Fund, including a new distribution of voting rights that reflects the current state of the global economy. They're advocating for an end to the traditional European management at the helm of the IMF and pushing for a formula that increases quotas for developing countries, based on economic output and purchasing power. This is not just about numbers. It's about ensuring that the voices of emerging economies are heard and valued in international financial institutions. Now, some might argue that these moves by the BRICS nations are a challenge to the established world order, while others see them as necessary steps towards creating a more equitable global economic system. As always, we'll provide you with balanced analysis, helping you navigate these complex issues without taking sides. So, what can we expect from this BRICS summit? Will their unified stance against tariffs and their push for IMF reforms mark the beginning of a new era in global economics? These are questions we'll be exploring in more depth throughout our show today. We'll also be looking at how these developments might impact your investments, from stocks to commodities. After all, understanding the big picture is key to making informed decisions about your financial future. So, stay tuned. We've got a packed show for you today, filled with insights and analysis that will help you make sense of it all. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, folks. We're glad you're still with us as we dive into the fascinating world of global trends and market insights. Today, we've got two intriguing stories that showcase the complexities of supply and demand in different parts of the world. First off, let's talk about China's urban exploration scene. It appears that abandoned buildings have become a hot spot for adventurers, with many enthusiasts flocking to these sites despite the risks involved. We're not just talking about your average thrill seekers. This community has developed its own set of rules and ethics, emphasizing respect for the locations they visit and minimizing their impact on the environment. However, as with any activity that operates in a gray area, there are concerns about safety and legality. Chinese authorities have started to crack down on these explorations, warning users about the dangers of trespassing and urging them to comply with local regulation. It's a delicate balance between allowing people to express themselves and ensuring public safety. On the other side of the globe, we're seeing a different kind of phenomenon unfold. The global obsession with matcha has led to a shortage of this prized Japanese tea, with many farms struggling to keep up with demand. This bright green drink has become a social media sensation, with its popularity extending far beyond Japan's borders. As a result, Matcha bars and shops are facing difficulties in sourcing high-quality ingredients, leading to shortages and disappointed customers. It's a classic case of supply and demand, where the rapid growth in popularity has outpaced the ability of farmers to produce enough matcha to meet the demand. Now, you might wonder what this means for investors or consumers. Well, it highlights the importance of understanding the intricacies of global markets and being aware of potential disruptions in supply chain. Whether it's a niche product like matcha or a broader trend like urban exploration, these stories remind us that even seemingly unrelated events can have far-reaching consequences. As we navigate this complex landscape, it's essential to stay informed and adapt to changing circumstances. So, keep your eyes peeled for emerging trends and shifts in consumer behavior. You never know what might be the next big thing or where the next opportunity might arise. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up another exciting episode, and I'm glad you're joining me for our final segment. Today, we've got a couple of interesting stories to dive into, so let's get straight to it. First off, if you're wondering whether the markets will be open tomorrow, wonder no more. The Economic Times has confirmed that despite Muharram being observed, both the BSE and NSE will indeed be functioning as usual. So, no holiday for traders and investors tomorrow. As our expert friend from Gojit Investments noted, ongoing fee outflows do reflect a risk-off approach, but DE inflows are providing some support to the markets. It's always a delicate balance, isn't it? Moving on, we have some IPO news that might pique your interest. Allied Engineering Works, a smart energy meter manufacturer, has filed preliminary papers with SEBI for an initial public offering. They're looking to raise Rs 400 crore through a fresh issue of shares, with an additional offer for sale of 75 lakh shares by the promoter, Ashutosh Goel. The proceeds will be used for setting up new manufacturing facilities and meeting working capital requirements. Now, this is where it gets interesting. Allied Engineering Works has already supplied 2.92 million smart energy meters across 6 states in India, which accounts for about 10% of the total smart energy meters installed in the country. They're looking to expand their operations, and with Axis Capital and TFL Capital Services on board as merchant bankers, this IPO could be one to watch. As always, it's essential to do your own research and consider multiple perspectives before making any investment decisions. We'll be keeping an eye on this development and bringing you updates as more information becomes available. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.